Let's discuss what events important for American markets are ahead of this trading week. Wall Street is opening a new week quietly as trading floors are shut for the national holiday Juneteenth. What trends are unfolding in the U.S. financial markets? Despite modest gains on a Friday, the main stock indexes closed the week with dismal results. The S&P tumbled 5.8% with the steepest decline since March 2020. The Dow Jones shed 4.79%, the worst weekly loss since October 2020. The Nasdaq closed 4.78%. It was the market response to the Fed's rate hike of 0.75 percentage points for the first time since Alan Greenspan and since 1994. Following this move, most analysts voiced concern about a looming recession. Experts from the Bank of America doubled the probability of a recession. They warn that the GDP could slow down to zero. Inflation could settle at about 3% and the Fed could increase interest rates to about 4%. JPMorgan says that there is an 85% chance of a recession. Some analysts expect the S&P to lose another 10% from the current level of 3,400 points. The outlook for the Nasdaq is also gloomy. Joe Biden is the only one who encourages investors. He said that the recession scenario is not inevitable, even though economic growth will slow down and inflation will remain high. He stressed that the U.S. economy is more advantageous than other advanced economies. At the same time, Americans do not share his optimism. The Consumer Sentiment Index by the University of Michigan dropped to the record low of 50.2 points in June, much worse than the expected 58 points. The overall pessimism means that consumers are worried about the further economic conditions. This week, traders are alert to remarks from the Fed's policymakers and the testimony by Jerome Powell, in particular at the House of Representatives on Wednesday and Thursday. The economic calendar reminds us about new home sales and unemployment claims. The U.S. Fed is due to post the results of an annual stress test that was launched after the financial crisis of 2007 and 2009. The regulator checks the balances of banks in a case of a hypothetical economic downturn. The US dollar index slipped to 104.4 on Monday, having lost gains on Friday. Amid the thin market, the intraday corridor for the index is defined between 104.10 and 104.70. The U.S. currency is taking a breather before crucial comments from the U.S. Fed. Previous remarks from the Fed's policymakers revealed that the regulator sticks to its hawkish policy. Fed Speaker Christopher Waller said that he would vote for another rate hike at the same extent in July if economic data matches his expectations. Besides, Loretta Mester warned about a mounting recession risks in the United States. Thus, it would take a few years to push inflation down to the target level of 2%. Investors will listen to comments from James Bullard. The US dollar has enough time to consolidate at current levels, recover and regain its footing. The Canadian dollar is facing a challenge, having surpassed the level of May 12. The USD CAD pair is trading at about 1.3004. The pair is likely to trade in the corridor between 1.2980 and 1.3010 today. Apart from hawkish global central banks and inflation peaks, the loonie is weighed down by a nosedive in oil prices. On a Friday, Brent crude plummeted by almost 6% because markets were alarmed by dismal economic prospects and further sharp rate hikes. The U.S. Energy Secretary spoke about a rising energy demand and inflated gasoline prices, so the oil market is hit by a double whammy. On the one hand, disruptions in the global supply chains, and on the other hand, recession fears. Today, fears are setting the tone for oil prices. Brent crude fell to $112.86 a barrel, the lowest price in nearly 5 weeks. WTI slipped to $109.37 a barrel. Crypto holders went through a rough weekend. Bitcoin sank below the psychological level of $20,000 recorded in 2017. The price sharply declined to $17,592. Today, the crypto is recovering, but fundamentals do not encourage the market. The flagship cryptocurrency has lost 68% of its value this year and 37% this month. Ethereum dropped below the landmark level of $1,000 but gained ground today. CoinMarketCap estimates that the overall capitalization of the crypto market is measured at about $877 billion compared to the peak value of $2.9 trillion in November 2021. What to expect further? Analysts say that the historical context of every bear market indicates a slump of 85 or 90%. As of June 20, Bitcoin lost almost 70%, so there is a room for a further decline. The nearest target is seen at $17,000. Further forecasts divert analysts into optimist and pessimist. The pessimistic camp foresees a slump to 7,000 or 10,000 per token, and optimists project Bitcoin to stall its decline at about $14,000. The corridor for today is defined between $19,800 and $20,900. Analysts recommend you to be ready for the week full of important events. Subscribe to our channel and we will keep you updated. See you tomorrow.